And I'm looking at the PSU Bank that gained over 2% today, and the Nifty Private and Nifty Bank added over 1%. What's driving the rally in banking sector specifically?
Yeah, coming to the point, Shweta, banking is considered as the epicenter of the economy. That means whatever be the macro development, everything that takes place in the economy that can be reflected in banking and financial services stocks. So that's how we can see there's some kind of positivity in the banking and financial services, both in private sector as well as public sector. Coming to the point, the HDFC Bank results have declared today. So, which carries the highest weightage right now in the bank Nifty. So the results are extremely good. That caused the banking stock to be in a positive territory today.
All right, so HDFC Bank result there, interesting to look out for. I want to specifically understand how HDFC Bank's result has sort of impacted the overall market and what it means for the bank. Let me quickly take our viewers through what HDFC Bank's Q1 earning is looking like. The country's largest private sector bank today reported net profit of 11,951 crores, jumping from 9,196 crores in the corresponding quarter last year. The bank's April-June financial year 24 quarter net income stood at 57,816 crores compared to 41,560 crores last year. I'll request my producers to pull up that graphics for our audience to better understand how the bank has performed. What is your understanding, Kranti, of how bank has of course beaten street estimates? The earnings are better than expected. What has helped HDFC Bank in gaining momentum that it did in the first quarter?
Shweta, these are extremely good set of numbers, both standalone as well as the consolidated basis. What caused the bank results to be in a positive territory? It shows the underlying strength of the economy. But what we need to point to understand during this quarter is HDFC Bank right now it's the results of the combined entity, the merged entity between the HDFC Bank as well as the NBFC HDFC Limited. The results are the combined entity. So they got HDFC Bank right now listed today. It stands as the standalone entity as a combined bank together with a market cap more than 15 lakhs crores, and HDFC now emerged one of the largest lender in the world. It is right now, as per the numbers available, it is the 7th largest lender in the world. It's a proud moment for all the Indian investors and Indians. One of the banks from India stands tall in the global rankings of global lenders are concerned. So, and these numbers are right now with the merged entity. Going ahead, what we can expect, given the kind of momentum in the economy, we can expect some more further decent set of numbers. The same kind of momentum can be continued with respect to HDFC Bank is concerned. The net interest margins also, as a standalone basis, it's up by 21%. They came up with 23,599 crores. So all the set of numbers, the underlying strength in the economy is truly reflecting in HDFC Bank numbers.
All right, the underlying strength of the economy, Kranti says, is looking good, and it's appearing in the numbers that we're looking at as far as HDFC Bank results is concerned, and also overall the bank Nifty and the private bank Nifty and the gains made by both of them in the stock market today. I also want to understand from you, Kranti, what are the big cues to look out for at this point in time? What should investors be looking out for as far as the big global cues and domestic cues is concerned?
Absolutely, Shweta. At this point of time, investors need to take into consideration how the Federal Reserve movements are going to be. One of the key thing is there are mixed reactions that are coming from Federal Reserve commentary. One hand, what we are expecting is there is a pause of interest rate hike from the Federal Reserve. The other hand, what we are getting a mixed commentary is the Federal Reserve can increase the interest rates further. So if Federal Reserve is going to increase the interest rates further, that's going to have a definite impact on the global equity markets going ahead. And coming back to India, what we need to see is currently the inflation is inching up higher. We can see the increase of prices of vegetables and other things right now, which is causing a worry for the investors in the medium to short term. But what we expect is that the inflation is going to cool down in India. But everything what we need to wait and watch the rising in inflation and the stability in inflation. We need to see how RBI is going to take a stance with respect to interest rates in the upcoming RBI monetary policy, which is scheduled in the month of August. So
All right.
that is extremely crucial how RBI stands on inflation and how they are going to gauge the interest rates going further. And we are already in the earnings season. How the first quarter earnings season that's going to pan out. These are the two things investors need to keep on their radar to gauge the market movement.
All right. And as far as inflation is concerned, from what we understand, the preliminary sort of information coming in by the way of how headline inflation has been in the month of June and the inflation numbers, the everyday news, of course, of how inflation is at an all-time high for easy consumable products from your dals to your fruits and vegetables, all of them is not looking good. And this is, of course, just the preliminary sort of data that we have. We are literally in the mid of July, and this all could have an impact overall on inflation numbers going forward.
Yeah, definitely, Shweta. Right now we have very unusual rains, so that have been causing the rise in pulses, the rise in prices of vegetables. So how much the impact is, whether it's going to continue in the next coming couple of months or it's going to cool down further. It is completely premature to say right now. We need to wait and watch for some more weeks to know the information, because this unusual problem of supply demand with respect to the vegetable agricultural products are concerned, that has been there in India. If you have to see few months back, the farmers have been throwing their tomatoes on the road. Right now, see, the same tomatoes are turned as a red gold. So this unusual thing is there in the price moment, erratic price moments in India always.
All right. And as far as corporate results is concerned, you've got a TCS, HCL, major tech companies. Their results have been more or less in line with estimates, not a big dampener and not something that could bring cheers. But overall, that did not really impact the market sentiments. How do you see the earnings season panning out so far, and what are your big expectations?
Yes, Shweta, you absolutely said. We started with the earnings season with TCS. Decent set of numbers, but market not pursued them as negative. The reason is the stock valuations looks attractive as there is a liquidity that's have been coming from foreign portfolio investors. So the domestic institutional investors also, they are taking some part of their portfolio, they're allocating in a staggered manner towards the IT stocks at this point of time, because these stocks are businesses and business models are quite strong. So despite of lingering inflation, lingering recession worries, investors could be able to take on a longer term perspective in IT stocks at this point of time. Coming to the other sectors like capital goods, they are going to post a decent set of numbers. What we witnessed some kind of price reduction and decrease in the prices of raw material prices, which is going to create some kind of improvement in the margin in the previous quarters. We can expect decent set of numbers from autos, as the numbers have been decent, and the auto ancillary sector, they are also going to post very good results. And the banking and financial services, we started with HDFC Bank with a very good set of numbers. The same we can expect with the banking and financial services. So by and large, most of the sectors are going to post a good set of numbers, but we need to see how the results of infrastructure companies and the cement companies, those are the neutral expectations we have. And also the metals also have a neutral set of numbers this time. By and large, it's going to be a decent earning quarter. That's what we have been expecting from the current earning season.
Okay, decent earning quarter is expected. Kranti, BFSI, realty, auto, what other sectors are we looking out for?
Yeah, these are the sectors. What you mentioned is that these sectors are going to post a very good quarter-on-quarter results. The banking and financial services and the capital goods and defense. One of the
Right.
sector that has been buzzing. Like what we witnessed is stocks like these are not the stock recommendations, just to track
Absolutely.
for the investor perspective, like stocks like Mazagon Dockyard, Hindustan Aeronautics. These are the stocks have been showing a big momentum with respect to their stock prices are concerned. So we need to wait and watch how these stocks earnings are going to pan out in the coming in the current quarter.
I also want to understand from you, you said defense sector is likely to perform better, and this, of course, comes on the back of Prime Minister going to the US. But we also have Janet Yellen, who's the Treasury Secretary, visiting India, her third visit in 9 months. And she's, of course, meeting the G20 finance ministers. How's that likely to impact the market, if at all?
Yeah, all these events, the G20 event is bringing in, drawing the attention of institutional investors and the foreign portfolio investors looking forward what's happening in India. So all these commentaries and the kind of exuberance and the kind of resilience the Indian economy is showing and the kind of commentary that is what we are receiving on regular basis from the G20 delegates also helping, and this has been showcasing the India's core strength to the foreign investors. That's the reason right now many of the foreign investors want to take the pie in India's growth story. These kind of events also helping the markets to demonstrate India's underlying story to the global investors.
All right. Amit Gupta has also joined us from FinTrekk Capital. Amit, appreciate you taking time out. Good afternoon to you. We were discussing the big sectors to look out for that would be driving growth in the Indian markets. And one of the key areas and points that we were discussing at this point in time was Janet Yellen's visit to India and a tighter partnership with the US and how that could impact certain sectors like BFSI, IT, so on and so forth. What are your big expectations, Amit?
Hi, thank you for having me. I believe these kind of visits are more crucial from a relationship point of view, given the geopolitical volatility which we have seen over the past few years. And as we have also seen in the recent visits, whether it was to the US or to the France, there is a lot of partnerships building in various sectors. So one of the beneficiaries which we saw from the US visit was in the defense sector. Also, when the visit was to the France, and what we are seeing is more and more people, or more and more companies are willing to commit to India. So whether it is in the semiconductor space, whether it is in the chip making, we are seeing more companies coming to it. Obviously, it's not going to happen overnight. Tesla is also among the headlines to come into place. The sectors where it has already happened, like in the semiconductors or the phone making space, I think those are the sectors where stock market investors should look to sort of build the positions or to invest fresh into it.
All right. Specifically on HDFC Bank stock, the stock is up as much as 2% at the end of the close of this markets day on Dalal Street after the Q1 results, which were better than expected, at some would say beating many estimates. Where is the stock headed now after the merger for the merged entity?
So look, I think, as far as the result was concerned, I think it was pretty much on expectation. There were few one-offs, which I believe, was due to the merger happening. We have to also understand that HDFC Bank did not have the mortgage. They had 2-year, 3-year mortgage. But now with HDFC coming into HDFC Bank and this merger is going on, now the loan book, it will become even more stronger. And the HDFC Bank will be in the level footing with other banks in the country, where the loan book growth is very much accelerating, like ICICI Bank. So my sense is there is obviously a lumpiness because of the liabilities which have gone up because of the merger, and those are coming in one-offs. But eventually the HDFC Bank is becoming one of the largest banks in the world, not just in India. And as far as the mortgage business is concerned, it is now at a level footing with other banks. So I'm quite positive on the stock, and technically also I think we are going to see a lot of inflows coming into the sectors because of this merger. Now the FI headroom has gone up almost 13-14%. So we'll see a lot of inflows coming in the next few months into this stock. If India's allocation goes up, or if any FI wants to invest into India, HDFC Bank being the number one bank now, and among the top 10 banks in the world, HDFC Bank will definitely find a place in the portfolio of many of the FIs.
All right, and we were just discussing what are the major global and domestic cues to look out for in the market this week. What are your suggestions?
So I think one of the things will be this Reliance demerger, which is going to take place into the markets. I think the 20th is the last trading day, and 21st is the X date when it gets split because of the Reliance Jio financial listing, which is going to happen probably 2-3 months down the line. So I think that's a big one. Reliance is also declaring results, on 21st. So I think in short term, the market would be, mostly guided by the earnings. I don't see too much of data which is coming into this week. FOMC is obviously next week. So that will be one key factor to look at, because FOMC is expected to raise rates, and this is a blackout period, so we will not see many of the FOMC members speaking about it. But I think the expectation is pretty much priced into the markets of having a 25 basis point rate hike. So I think earnings will guide most of the stock market action this week.
All right, and before I come to you more for earnings, let me quickly also apprise our viewers at this point. Among individual stocks, SBI was the top gainer in Nifty today, rising as much as 2.86%. Dr. Reddy's, Wipro, Grasim and HDFC Bank were among other major gainers. On the other side, ONGC was the top loser, falling 1.68%. Hero MotoCorp, Tata Motors also lost more than 1%. On the sector specifically, what sectors do you see driving market and growth in days to come, Amit? What sectors are you most positive about as far as earnings seasons is concerned?
Yeah, I think financials will continue to be an important part of the market structure at this point of time. We are going through a phase where the asset quality is, under control. The growth is coming back in the credit growth. A lot of the sectors are showing, very promise of expansion, especially these PLI schemes-led sectors. So I think financials has to be, one of the parts of the market which is continuing to do well. I'm also interested in non-lending financials, especially the insurance space, life insurance in particular. Where I feel there is the pain of the last 2-3 years is now done, and we can see, growth going forward. Obviously, some regulatory changes will also help. Apart from that, microfinance sectors has been on our radar for quite some time, almost now 12 months, and we do have, positions recommended to subscribers on that. And they are coming, almost for the next 2-3 years, almost every microfinances is committing almost 25%, 25 to 30% growth. That would mean 2 to 3x on the books, 2 to 3x change in the books. So that is the 2-3 sectors: lending, financials, life insurance, and microfinance, where we are most interested in. This is going in with the trend. As far as the contra bets are concerned, we are looking to initiate some positions in the rural theme, where whether it is agrochemicals or whether it is dairy sector, these kind of contra bets we are taking, where valuations are at almost 2-3 years lows, and creating positions would probably take 3-4 months time, but that could do well going forward in FY25.
All right. Globally, and I'm looking at data and figures that is coming up, most European and some Asian markets are also slipping up after data that shows the Chinese economy is in fact growing a lot more slower than it was expected, and market of course seems to be getting impatient. Is that likely to have any impact on India at all?
So no, slowing China would mean that global growth is slowing because China is such a big part of it. But I think at some point of time, all of the Chinese slow growth will get priced into the market. I don't think the China will see major inflows in the next 5 to 7 years because of whatever is happening politically, whatever has happened politically rather. And because of that, people will adjust their portfolios in the markets, getting out of China on every rally and finding pockets or in other emerging markets like India itself to invest. So my sense is that, uh, I would like to keep away from the sectors which are very China dependent, like commodities and metals, etc. And some portion of chemical sector also. But we can easily build a portfolio which is not so much dependent on the Chinese growth, and there are enough opportunities according to that. So I'm not so much worried about China getting slowed, even though at a global level it will definitely have an impact.
All right. Kranti, I want to take the same question to you. Any impact of slowdown in Chinese growth for India? Is it a cause of joy or a worry?
It's completely neutral with respect to the stock markets are concerned. One thing is, if there is a slowdown on China, of course, it resembles, there is a slowdown in the global economy as China derives most of their revenues from their exports. But the good thing to ponder for India is, if there is a slowdown in China, the metal prices, because we want to improve the domestic production in India, which is going to create a headroom for the Indian consumers and Indian producers with respect to the raw materials are concerned. But overall, it's going to have a neutral impact for the Indian economy and Indian markets. But if there is a slowdown in China, we can see some kind of the emerging market flows that can be diverted towards the Indian economy, given the kind of the growth nature of India, and also because since we are the fastest growing economy right now, and also India is emerging as the manufacturing hub, the Atmanirbhar Bharat, and many of the developments that are taking place with respect to the chips or any kind of manufacturing is concerned. India is going to attract a lot of FDI, which is foreign direct investment, as well as foreign portfolio investor flows in India. So we need to carefully watch how the things are going to be. One thing is, we need to also look the valuations of Indian economy with respect to valuations of the Indian market with respect to the vis-a-vis the relative emerging market space also. These are the factors one need to keenly observe over a period of time.
Okay, valuation of Indian economy, Indian markets. I also want to quickly understand from the two of you before I let you go. People who've been watching very, very keenly the rally, the bulls run in the markets, hoping and looking to book profit. Will there be a correction anytime soon? Amit, to you first.
So I think, just the way the structure is currently placed into the market. So, a couple of weeks ago, I was also on your channel, and I said that, it's still very early days in the bull market. At that point of time, we were almost at 18,700 or sort of levels. And my sense is that, this big breakout which happened above 18,800, 900 kind of levels, at least on Nifty, this would mean that the rally would continue. Obviously, there are very heated parts of the markets where I would not like to create any kind of fresh positions. But I think overall, this rally could, continue. We are almost like 19x on FY25 earnings. which would mean we are not very cheap, but we are not very ultra expensive also. And given the fact that these two mergers are happening, we are going to see a lot of inflows happening in HDFC Bank and Reliance, which are the big heavyweights of Nifty. On top of that, IT, I think was pretty much oversold into the market given the downgrade which happened for the various brokerages. So I think if IT, HDFC Bank, and Reliance, these three contribute, then this Nifty rally can even touch 20,000 or even go further than that. So my sense is that one needs to pay a little bit cautious about what valuations you are paying while buying any stock fresh. But apart from that, my sense is that when valuations have run up and the participation is not up to the mark, then the corrections usually take some time, test a lot of patience, suck in more people into the markets. And then only we might get a correction, but I don't see a correction in the short term. I mean, even I'm not talking about a 3% kind of a correction. I'm talking about like a 10% type of correction. So my sense is it's going to be more like 3% of a correction in short term, unless we get a surprise. Yeah.
All right, Kranti, before I let you go, would you like to weigh in on that? What sort of correction are you looking at?
Shweta, this rally have more legs going ahead, but we can expect some kind of consolidation in the market rather than a correction. But we don't know how the geopolitical things that will change overnight, which are beyond one's control. But Shweta, definitely I can watch for one thing is any correction on Indian markets. It's a very good opportunity for the investors to accumulate stocks for a longer term basis. It's going to be a very good opportunities, and Indian markets time and again they have proven that they are resilient and resurgent markets. So any correction, that's a very good opportunity for the investors, and Indian market definitely is a market to buy on every dip.
All right, gentlemen, appreciate you both joining in with your expert opinion. We, of course, continue to track Indian markets and global cues as well as domestic cues driving rally in Indian markets. We are very, very upbeat. Earnings seasons is on, and so far it's not been a dampener. It's in line with expectation. Hopefully will continue to be that in coming days and weeks ahead. We'll get you both back very, very soon. But shifting focus for now. After tomato, it's dal prices burning a hole in people's pocket. Prices of Toor Dal, also known as Arhar Dal, a staple for many, has shot through the roof. As of 16th of July, the prices of Toor Dal have increased by more than 32% on year. Now, this according to Department of Consumer Affairs data. Toor prices have risen every day in the past week from 127 rupee per kg a month ago to 136 rupee per kg as of 16th of July, increasing by a sharp 7%. It was at 103 rupees a kg a year ago today. Now, prices of urad and moong too have risen by 10% and 8.8% respectively on year. In fact, the overall cost of a thali, or an Indian plate as we call it, has risen by almost 25 rupees a plate. So it's becoming more and more expensive for people to afford basic staple diet, including dal, sabzi or vegetables as well as fruits. How is it impacting people's money? It's impacting their budgets, and what's driving up the prices. We'll discuss all that and more. Avni Jain, who's an economist with HDFC Bank, joining us at this point in time. Avni, appreciate you taking time out and for speaking to Newsline. I want to begin by understanding as basic as what is driving the food prices up. People want to know what's happening.
So if you see the past data for June, there was a sharp increase in vegetable prices sequentially. Beside that, there was an increase in meat and fish prices as well as egg prices. Beside that, cereals and pulses, they also were tracking in double digits. So overall, these were the segments which led to a jump in food prices in June. But if you see the trend so far, as you have also mentioned, that prices of tomatoes and other staple food items like ginger, chilies, these have increased. Toor Dal prices are again increasing, and these are sort of because of monsoon situation. So these are the major drivers of food inflation so far, I would say.
Okay, and you know we're looking at staple diet, Toor Dal, your chana is still, many would say, a luxury, but Toor Dal is not a luxury so much because it's used literally in south of India. It's used from your sambar to your chutney everywhere. In north of India, it's the basic Arhar dal that we use in almost everything we eat. It impacts not just people's budget, but it also impacts their dietary habits.
Exactly, and it's majorly because you would see the uneven distribution of monsoons this year has been impacting pulse prices, and tur being the major crop of Kharif season, its prices are rising too much because earlier when monsoon started, there was an deficit in major tour producing states like Maharashtra. And even now, when there's excess rainfall in some parts of India and a deficit in some part of the country, many major tour producing states are still not receiving the kind of rainfall that is required for tour production. So that is how there is a increase in price. And as you have mentioned, that although it's not although it's not a luxury product, but because of the sowing situation and you can see the weekly progress of the Kharif sowing so far also. Tur production so far on year is in double digit negative. So that's how the prices are increasing.
All right, and it seems from what I'm reading that release of Toor from centre's buffer stock has also in fact not affected the prices, not gone down, and the intervention that the government took has not resulted in prices getting down. Why is that?
So overall, I would say like the situation could be because of the production only. So if your production is not going up, and even though government is releasing some kind of buffer from their stocks, overall because of the overall supply situation, the prices are going to remain elevated.
Okay,
And also.
Right, and I'm looking at overall pulses inflation. It's over 6%. I want to understand from you, Avni, is this common? Now, you said last year as well that there was a sequential increase in prices of dal and pulses overall, but have you seen an inflation to the tune of 6% recently, or is this particular to this year? I want to get a sense of how bad the situation is basically for people watching us out there.
So pulses inflation is usually there is a phenomena called cobweb phenomenon in economics. So pulses inflation typically follows that. So in years whenever there are high prices, the next year you would see an increase in production that tends to decrease the prices of inflation. So basically it becomes a cobweb like a phenomena. So it's not unusual that pulses inflation increase, but it's usually followed by an increase in production. So you would see next year prices going down.
All right, and specifically in Maharashtra, Karnataka, I'm looking at tool prices that have increased as much as 41%. And you are of the belief that next year, and speaking from a point of view of finance and economy, the prices will go down next year. So it's perhaps just this year that people will have to bear with it. Next year it's going to be low, and then perhaps the year after that it is going to be high again. So it is an economic phenomena as opposed to something that we can physically control here.
Like if we simplify it, then you can say that this is how the pattern should behave. But of course, there are other nuances as well, like your fertilizer prices or commodity prices. So you would have seen that oil prices are again touching 80. So and expectation on the street are that these can go further up. So if that situation arises, then perhaps you would not see the kind of moderation that one would expect because of an increase in production.
Okay, that's surprising because we are of course, and you know, we are of course hoping that the prices will come down. Government of course is taking interventionists and the measures that the interventions that government is taking to bring down the prices of essential pulses, and not helping so much because the prices continue to go up. And they are up on a month-on-month basis. I'm looking at data right now, about 5 to 6%. What are you expecting government to do? What sort of interventions can government take right now to bring some relief? I understand that, you know, supply chain issues that have cropped up as a result of rainfall, the excess of rainfall that north of India has seen, cannot be done away with, cannot be wished away with, you know, in a week's time or 10 days time. But what sort of efforts or interventions that the government can take right now to bring perhaps prices down in a month to come?
So I think already some of the governments like West Bengal and, if I'm not wrong, Tamil Nadu, they have started selling tomatoes through Shuffle chain and on PDS shop, so that the sharp increase in the price of tomatoes you have seen, that could come down. So of course, like these type of supply measures government can come up with, which in particular would help to curb vegetable prices or inflation. Two, on the cereal side, I think the government could, of course, can release buffer stocks from rice and wheat, etc. So on the top of my head, these two, and extremely, like going on the extreme side, the government, if the prices of rice and wheat increases very, very sharply, then government could come up with the free ration program that they earlier had, and which they discontinued. But this is on the extreme side.
All right. I'm also given to understand tomatoes in Delhi are being sold at a discounted price. This, of course, is a measure that the government is taking, given the prices of tomato that has resulted in memes all across social media. I don't know, as an economist, if you've had time to take a look at those memes where you walk into a jewelry store and you buy tomato instead of buying gold. Memes aside, pulses and the production of pulses in the last 10 years has shot up 50% in India. We are one of the largest producer of Toor Dal, and I'm looking at data right now. What exactly is therefore hurting our sustainability or sustenance rather when it comes to supply of pulses? Are we not producing enough, or is the population way more than what we are producing?
So my answer is definitely there is a demand supply angle to it, and also there would be an angle of importing. So if from what I understand, we import a lot of agriculture products, and because of that also there could be a hit on the prices of dal, in particular Toor Dal.
All right. So, of course, the demand supply, there's a mismatch there, and hence why Toor Dal is going to cost you, if not a kidney, then perhaps substantially more. And the prices, especially prices of a vegetable and a non-vegetable thali, are becoming equal, as some would say, because a chicken is costing you as much as a ginger, 1 kg of chicken to 1 kg of ginger to 1 kg of Toor Dal. Everything is net equal. What does it really mean for people's dietary habits? Well, we'll have to wait and find out. Avni, thanks very much for joining with your inputs on that story. And with that, it's a wrap on this edition of Business Plus. Thanks very much for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more. Streaming on world's first news OTT. News 9 Plus. Download now.
3, 2, 1, now.
भारत मित्रता निभाना जानता है, तो आंख में आंख डालकर देखना और उचित जवाब देना भी जानता है।
Our ideology of passive, defensive, reactive doesn't really help.
Time has come to convert it into a rocket force.
When you have tactical weapons with a 500-kilometer range, China's lines of communication are within striking distance.
It's a shot in the arm for India's rocket force dreams. Acquiring 120 Pralay ballistic missiles boosts India's defense preparedness against China. So far, India's ballistic missiles have been nuclear weapon carriers. Now, it plans to raise a rocket force of missiles tipped with the conventional warheads.
The Indian military has conducted several war games on what the next conflict with China could look like. China's missiles have been the most worrying aspect of these simulations. Chinese rockets and missiles, it was found, would target India's military infrastructure, air bases, bridges, army bases in the first hours of any war. India, in comparison, has fewer rockets and missiles. Its artillery regiments are primarily made of 155 mm howitzers, which have a maximum engagement range of around 40 kilometers.
What happens when the Chinese have those missile brigades located in Tibet and also located in Xinjiang? Do they stabilize us? It's a threat in being. They are there already there. So if they are there already there, we need to have a similar kind of arrangement to reciprocate back. So it is just one warring system. If you already have Agnis and you already have Prithvis, the Agnis and Prithvis are not destabilizing. They are being a deterrent. If you have similar missiles, even if they are tactical in nature, between 150 to 500 kilometers, they also will add on to the same bouquet that we have.
Now, this force will feature a bouquet of weapons: Pinaka rockets, the Smerch, the BrahMos, and the Pralay. Now, all of them provide layered offensive capability along the line of actual control. And once all of these systems are put together and a command and control system is in place, it becomes a rocket force.
But I think the necessity is felt in the armed forces that we must have a rocket force now, because there is a game changer into the quality of warfare that is being undertaking. And we are just learning also from the way the Russians have been doing in Ukraine war, the kind of number of missiles that they have fired, thousands and thousands of missiles are being fired. So then there is a whole new character to war. The character to war, we have to be at par with it.
Having assigned Prithvi the role of a strategic weapon, now for tactical support, you need another weapon. And hence the development of Pralay, which has been taken up by DRDO, has been done. But even before Pralay, I remember we made a short-range system called Prahar. You might have heard its name, which was 200-kilometer range.
If you recollect, General Bipin Rawat spoke about 3 years ago that there should be a rocket force. It didn't come up at that time. And we had a large number of missiles. Our integrated missile development program has been on for 3-4 decades. We are now reaching a kind of maturity where it is visible. We have Agnis 1, 2, 3, 4, 5. We have Prithvis 1, 2, 3, 4, 5. So now we are having that whole bouquet of missiles. Time has come to convert it into a rocket force.
The rocket force will deter China to a large extent. When you have tactical weapons with a 500-kilometer range, China's lines of communication are within striking distance. And then you have the ability to carry out simultaneous action against the Chinese in the front and in the depth. You can make the whole battle non-linear. So to that extent, this force provides some kind of deterrent value against China. The Chinese will realize that to carry out offensives comes at a cost.
The missiles are part of the Indian Strategic Forces Command, which have all the weapons platforms to deliver nuclear weapons. So if you put a conventional warhead, it can have, it can strike what you call value points. There are specific targets. Say
the Chinese communications hub, command and control hubs, or some other prepositioned stores, logistic supply chain. We can hit those specifically.
The People's Liberation Army Rocket Force, or the PLARF, is the world's largest conventional missile force. It has over 2,400 conventionally armed ballistic and cruise missiles and about 90 intercontinental ballistic missiles. These are divided into 40 missile brigades. These missiles can target everything from warships at sea to military infrastructure. In the last 3 years, China has increased its missile forces by 30%. All of these missile units can swiftly be positioned in Tibet across the LAC.
Since China's aggressive moves in Ladakh in 2020, India has begun rebalancing its military posture. It has begun constructing enormous infrastructure and rushing troops to the border regions.
We have had the Galwan clashes, we have had the more recent clashes in Arunachal and so on. The problem is that the Chinese are always on the offensive, and our ideology of passive, defensive, reactive doesn't really help.
So we are also now ready to give it back in the same system destruction, system confrontation that the Chinese talk of. We can do the same thing back to them. So this will be a game changer in warfare.
Pralay is an aerodynamic trajectory. It flies within the atmosphere. The advantage is there. There's an advantage because if a missile is taking an aerodynamic shape, the prediction of the flight path of the missile cannot be done. For engaging a missile by another missile, what we call as anti-ballistic missile system.
And the Chinese have gone a very big way to large number of cruise missiles. They call it Dongfeng Express, the kind of Dongfeng missiles that they have. So if their Dongfeng Express has to be responded to, we have to get on ready to undertake this kind of a challenge. To that, we do require a rocket force.
See, the concept of Indian rocket force started with the onset of India's guided missiles development program, which happened in 1983, July to be precise, under the leadership of our former president, Dr. Abdul Kalam.
I'd like to inform all of you that the mission 100% successful.
And as a result, 5 types of missiles were planned to be developed under IGMDP.
Kind of belligerence and expansionism being shown by a northern adversary, the time is at premium.